Hey everyone, this is Kirk here again at OptionAlpha.com, and in today's video I want to show you guys exactly how we turned a broken wing butterfly into a regular butterfly with no downside loss, total upside profit potential. So at this point we have a regular butterfly on that we had hedged into via a broken wing butterfly, and now we have a position that will not lose money no matter where the stock trades, and actually should make us a pretty decent profit regardless. So I'm going to walk through that step by step, and again I want to start with the broken wing butterfly, how we created that position in the first place, and then walk you through how we got to the regular butterfly so that you guys understand that logic and how we made those trades. So right here is just a very simple profit and loss diagram for a broken wing butterfly. So again, I've gone over this a couple times in other videos, but just to recap, what you do on a broken wing butterfly, and in this instance it's a put broken wing butterfly, so we're just trading puts, but you'd buy one of the D strike puts, and that creates this profit and loss until you get to point C or C strike, where you would sell twice as many of the options that you bought here at D. And you can see that's pretty evenly spaced, so it's just probably the next strike price down. After that, this is where the broken wing comes into place. You actually skip over strike B. So in this case, we go all the way down here to strike A, and we buy another put down here at strike A. This creates this long end of the profit loss diagram, or this broken wing. And that's because you're skipping over a strike. So if these strikes are $5 wide, you'd make this difference here $10. If C and D are $1 wide, you'd make this difference here $2 in strike price, okay? So that's a very simple explanation of what the broken wing butterfly is. Now let's look at the trade that I initially put on the trading alerts for members. Again, this only went out to members, so you can't get these unless you subscribe at OptionAlpha.com. But the initial trading alert was opening, and we bought two, so that's just how many butterflies we bought, EEM December 2013 options. But here's where the strike prices come into play. So we bought the 42 and we sold the 41s, and then you can see we skipped over the 40s and we went all the way down to the 39s and bought the 39s. So the 42s, the 41s, and the 39s. This all together created a credit of 12 cents per butterfly. So not a huge credit, but what that did is allowed us to at least lock in a profit should EEM trade anywhere above, say basically 40 at expiration. But here's what happened. EEM started trading higher, so what we did is we actually bought back this embedded vertical that was missing. So remember, I keep talking about this missing strike price that you skip over with a butterfly. And this is how you turn that broken wing butterfly into just regular butterfly with total upside potential. So down here you can see what alert went out to members just the other day, and that was to hedge this trade by buying the vertical in EEM, again the same December 2013 options. And here's the difference. In this instance, we bought back the embedded vertical, which was the 40, that missing strike price, and the 39. So we closed out the 39 and established a new strike at 40. This altogether total cost us 11 cents per vertical. So you can see we originally took in 12 cents in credit, and it cost us 11 cents in debit to actually hedge this trade. And so we still have $1 left over at the very least. But you'll see here shortly on our profit loss diagram that we actually have a very good position where we have no downside potential in this butterfly. It's total 100% upside potential for EEM. So let's go to the actual chart here. This is a look at my actual trading platform, and I've thrown in the simulated trade here that we made, that hedge trade, just to show you guys what we did as far as the original trade. So this is a profit and loss of the original trade that we made, and I'll go through it. So again, you can see here we bought the 42s, and that was here. That kind of pins this break-even point all the way out here past 42. We bought the 42 puts, then we came up to the 41s, sold twice as many 41s. We skipped all the way over that 40 strike and went all the way down here to 39 and bought the 39 puts. So this is the original profit and loss diagram that we had on this broken wing butterfly. Again, you can see we leave that upside potential here because we took a credit on the trade. But what we did is when we hedged the trade, we got rid of these 39s. So these 39s that are down here that we originally bought, we closed out that order, and we opened a new order right down here at 40. And what this does is this creates a profit loss diagram that looks like your regular butterfly. So again, I'm going to remove this trade so it can show you the original, or now the new trade that we have on right now. So this is the new butterfly that we have on. We still have the 42 strikes right here. We are still short the 41s, twice as many as the 42s. And then you can see here we now have moved our further strike from the 39s to the 40s. This creates this very natural, normal butterfly graph that you're looking at. But if you look here on our profit loss on the downside, there is no possible area where we actually lose money on this trade. So it's completely free, and that's because we bought back that embedded vertical for the same price or less as the total credit that we took in. So now this is a butterfly that only costs us about $1 in credit. So we have $1 in credit built in, but no matter where the stock trades, we're actually going to make money on this trade regardless of where EEM trades. So our ideal position obviously would be to hold it until it gets very close to this 41 strike, and that's where we start making a lot more of our money in this butterfly. So we're going to hold this trade pretty close to expiration unless EEM starts trading very close to 41, and then at that point we'll close it out for a nice little profit. So that's what the broken wing butterfly looks like, and now what the broken wing has turned into is just a regular butterfly with no downside potential and total upside profit. So hopefully that was really easy to follow and understand. As always, if you have any questions or comments, please add them right below to the video, and happy trading.